morning. You're watching World Business Report. I'm Karthik Malhotra. All the stories that you need to start your Wednesday morning with, from news on the world of business from around the world, right here over the next 20 to 25 minutes. So don't go anywhere. Let's start World Business Report. In a financial landscape marked by a decelerating trend, the ongoing deceleration in inflation rates is projected to exert a considerable impact on the Federal Reserve's forthcoming policy deliberations. This trajectory of subdued inflationary pressures is increasingly suggestive of a potential conclusion to a series of rate hikes by the US Fed. Let's take a look.
U.S. consumer prices continued to cool in October, data released Tuesday showed, supporting views that the Federal Reserve was probably done raising interest rates. The Labor Department said the annual inflation rate dropped to 3.2% from 3.7% in September. Month to month, prices remained the same. Both readings were lower than what analysts polled by Reuters had expected. Most economists believe the Fed's monetary policy tightening campaign is over, a narrative that Chair Jerome Powell and other Fed officials have pushed back against as the central bank aims to bring the annual inflation rate down to its 2% target. Powell just last week said the Fed would hike rates again if appropriate. Though consumer prices have come down from a peak of 9.1% in June of 2022, the disinflationary trend has stalled somewhat against the backdrop of a strong economy powered by a persistently tight labor market. Still, the closely watched core consumer price index, which excludes volatile gas and food prices, also ticked lower from the prior month, and the annual increase for underlying inflation was the smallest in 2 years.
All right, reducing inflation in the U.S. and a potential soft landing by the U.S. economy. But talking about soft landing, U.S. airlines are gearing up for what's anticipated to be a record-breaking Thanksgiving travel season. It's projected to witness a substantial surge in passenger numbers, and this forecast underscores growing traveler confidence amid eased pandemic restrictions. Let's take a look.
U.S. airlines are predicting a record Thanksgiving holiday travel season. A group representing the industry has forecast 29.9 million people will fly over that period. That would be an all-time high and 9% up on last year. It would also be 1.7 million above the pre-health crisis record. Airlines for America represents United, Delta, and other big names. It says November 26 will be a record-setting day with 3.2 million travelers expected. The Transportation Safety Administration is expecting similar numbers over the holiday season. All the forecasts come despite cuts in services to New York airports due to air traffic control staffing issues. JetBlue, for one, has said it ended some flights as a result. Airlines generally have benefited from strong pent-up demand following the end of lockdowns. That has allowed them to set sky-high fares on some routes. Looking beyond Thanksgiving, some now see travel to Asia-Pacific destinations as the next boom market. Delta says it plans to increase capacities to the region by up to 50% over the December quarter.
All right, 50% over the December quarter, Thanksgiving season. And at Thanksgiving, what do? You go out and shop. So earning reports from retail giants Walmart and Target are approaching, overshadowed by concerns about the impact of inflation on their financial performance. Market watchers eagerly anticipate insights into these companies' strategies amid challenging economic conditions. Here's the report.
Walmart and Target will offer clues this week as to retailers' fortunes over the crucial U.S. holiday season. Wall Street hopes they'll fare better than last year's turbulent holidays, when inflation peaked and shoppers' wallets took a hit, and that recent data showing better wages and food prices coming down will encourage people to spend more. Third quarter earnings for both companies on Wednesday and Thursday may paint a clearer picture. But investors tell Reuters they already worry Walmart and Target will have lots of unsold merchandise and be forced to offer discounts during the holiday season. Rising credit card debt, depleted savings, higher interest rates are still hounding consumers. The National Retail Federation has predicted this year's holiday sales will rise at their slowest in 5 years. and both Target and Walmart have already offered holiday discounts in October, well ahead of Black Friday. LSEG data expects Walmart to post a rise in third-quarter sales. However, Walmart's decision so far to not hire seasonal holiday workers is a telling sign, according to one investor who spoke to Reuters, who added it may mean the company doesn't expect high shopper traffic over the holidays. Target's CEO has said customers were pulling back even on groceries. Nearly half of its sales come from clothing, home goods, toys, and electronics, and LSEG data shows it is expected to post a drop. Still, Target is hoping to draw in holiday shoppers with new merchandise, including collaborations with Ulta Beauty and Kendra Scott Jewelry. Walmart, meanwhile, is betting on a $9 billion store remodeling plan.
All right, clouds of high inflation, high prices plaguing Walmart and Target this festive season. But let's move across the Atlantic to the Eurozone. Now, despite a contraction in the Eurozone's Q3 GDP, a simultaneous rise in employment figures offers, on that cloud, a silver lining. This juxtaposition highlights potential resilience in the labor market amidst economic challenges. Let's take a look.
The Eurozone economy slightly contracted in the third quarter. That's what official European Union statistics showed on Tuesday. It said gross domestic product in the 20 countries sharing the euro fell 0.1% quarter-on-quarter in the July to September period. The result heightened expectations of a technical recession if the fourth quarter turned out to be equally weak. Last week, the European Central Bank said the Eurozone would likely slightly contract in the fourth quarter, or at best stagnate. The view came about after business activity data for October showed more weakening of demand in the dominant services industry. EU data showed 0.1% quarterly economic growth in France with 0.3% in Spain. It failed to offset contractions elsewhere, including a 0.1% drop in European powerhouse Germany. But even though the Eurozone economy weakened, employment still rose 0.3% quarter-on-quarter in the same period. German investor morale also improved more than expected in November. The ZEW Economic Research Institute said its economic sentiment index rose 9.8 points from minus 1.1 points in October and entered positive territory for the first time since April. The number beat analyst forecasts and showed those polled expect Germany's economic situation to improve over the coming 6 months.
All right. Foxconn, the largest Apple manufacturer, Apple supplier, has stunned financial markets with an unexpected surge in profits, showcasing a substantial upswing in its performance. This surprising boost solidifies Foxconn's resilience in navigating global supply chain challenges and underscores its pivotal role in the tech manufacturing landscape. Let's take a look at this package.
Earlier this month, Apple gave a sales outlook that disappointed Wall Street. But on Tuesday, one of its biggest suppliers posted a surprise jump in earnings. iPhone assembler Foxconn said net profit rose 11% in the third quarter, hitting $1.3 billion. Analysts had predicted a drop of 11%. The Taiwan-based giant credited strong demand for smartphones ahead of the holiday season. However, it warned that revenues for the fourth quarter and full year would still log slight declines. The earnings announcement comes amid investor focus on reports that the company faces a tax probe by Beijing. Chinese state-backed media have suggested authorities there are unhappy that company founder Terry Gou is running for president. That aside, the world's biggest maker of electronics for other firms expects performance to gradually improve. The company says the second half of the year is when it usually sees hot sales.
All right, Taiwanese Foxconn there, but let's cross border from Taiwan into China. Huawei's impressive 83% surge in sales has not only elevated its own standing, but has also significantly bolstered the Chinese smartphone market. This remarkable sales hike commends Huawei's resilience amid geopolitical tensions and also reinforces its dominance in shaping China's own tech industry. Take a look.
The smartphone market made a big recovery in China in October. Shipments were up 11% according to data from the research firm Counterpoint on Tuesday. It said strong sales growth at Huawei proved a major contributor to average year-on-year growth for smartphones. The data showed sales at the Chinese tech giant were up 83%. It also said sales at rival Xiaomi were up a third in October, but it didn't provide any specifics about Apple's performance during the same period. It's welcome news for Huawei, which has spent years struggling with US sanctions. In August, the company launched its Mate 60 smartphone series, which analysts said was powered by a self-made advanced chip. Some see that as an answer to Washington's efforts to stop shipments of some chips to China. But Tuesday's data wasn't all positive for Huawei. Counterpoint said there could be lingering bottlenecks for the firm, as it could still see production issues. Counterpoint said China's smartphone market has seen sales fall over several quarters, with a 3% drop in the quarter ending June. But analysts expect the market may be on course for a rebound.
All right, staying from smartphones, moving to telecom. Vodafone's second quarter report reflects a notable improvement, predominantly driven by robust growth in the German market. The telecommunications giant's strategic success in Germany contributes substantially to its positive momentum, showcasing adaptability in a competitive industry. Take a look at this.
Vodafone's revenue was up in the most recent quarter, and it's largely thanks to growth in its biggest market, Germany. The British telecoms firm announced Tuesday a 4.2% rise in group service revenue for the 6 months to the end of September. It saw a 4.7% growth in the second quarter. Vodafone said it had delivered improved revenue growth in nearly all of its markets in the first half. It credited a focus on customers and said simplifying the business had worked out. But while Germany was a positive for the group, Italy and Spain continued to decline. The company also kept its guidance for broadly flat full-year earnings of around $14.2 billion. Vodafone shares have not been a hot pick this year, dropping more than a quarter over the last 12 months. And that run continued Tuesday, with shares falling more than 2% in early trade.
All right, flat guidance there coming in from Vodafone, but soaring high in Germany. Talking about soaring high, Boeing witnessed a significant surge in stock prices following reports hinting at a potential end to China's suspension of the controversial 737 MAX aircraft. This development marks a potential turning point for the aviation giant, hinting at a possible revival in its relations with one of the world's largest aviation markets. Let's take a look at this.
Boeing shares soared roughly 5% on Monday on news that China may end its more than 4-year freeze on purchasing the airline's popular 737 MAX as soon as this week. A report from Bloomberg News over the weekend said China could unveil plans to repurchase the plane when U.S. President Joe Biden and Chinese President Xi Jinping meet at the annual APEC summit in San Francisco on Wednesday. Boeing has been all but shut out of new orders from Chinese carriers since 2017 after 2 deadly crashes of the 737 MAX and amid rising political and trade tensions between Beijing and Washington. But in September, Boeing slightly increased its annual 20-year forecast for new plane deliveries to China, citing economic growth and increasing demand for domestic travel. Boeing said that China's fleet would more than double to nearly 9,600 jets over the next 20 years, and that its domestic aviation market would be the largest in the world by then, with demand for nearly 6,500 single-aisle planes such as the Boeing 737 MAX. Also lifting Boeing shares on Monday, the company secured orders for 125 wide-body jets worth more than $50 billion from Emirates and its sister airline Fly Dubai at the opening of the Dubai Air Show.
All right, cashing in on record orders there, Boeing. And talking about cash, Australia's ANZ Bank celebrates its historic milestone, posting record-breaking profits despite challenging economic landscapes. The bank's resilience and strategic maneuvers contributed to its commendable financial performance. Take a look at this story.
Australia's ANZ Bank posted record profits on Monday. Income soared thanks to surging demand for its institutional banking services. That took annual profits to $4.7 billion. But that was actually short of analyst estimates, sending shares in the bank lower. The stock was down over 3% by mid-session. Investors also expressed concern over ANZ's aggressive bid to sell more mortgages. It's the last major lender in Australia to offer cash handouts to lure new home loan borrowers. That has seen profit margins narrow more than expected at the bank's retail unit. Some analysts say there is concern the company is sacrificing profitability in its effort to do a bigger volume of mortgages. Chief Executive Shane Elliott denied having any such intent. He said criticism by other banks was just sour grapes, with rivals trying to justify their loss of market share to ANZ.
All right, staying with Australia, following a cyber incident, Australian ports are now fully operational once again, signalling a return to normalcy after temporary disruptions. This recovery marks a crucial step in safeguarding critical infrastructure against cybersecurity threats. Take a look at this story.
Several of Australia's biggest ports are back in operation after a cybersecurity incident. The breach had crippled container terminals in Melbourne, Sydney, Brisbane and Fremantle. They were forced to suspend cargo movements for 3 days. But on Monday, port company DP World Australia said operations had resumed that morning, though there would be disruptions over the coming days. The news was a relief for businesses, with the firm handling about 40% of the goods that flow in and out of the country. Speaking in Parliament, Home Affairs and Cybersecurity Minister Claire O'Neill said such incidents were concerning.
This afternoon, DP World announced that they are resuming operations at their facilities. Their expectation is that 5,000 containers will leave their ports today. Speaker, the incident at DP World is the latest in a string of cyber attacks which have shaken our country.
Earlier this year, Australia set up an agency to coordinate the response to major hacks. On Monday, ministers released some details of new laws that would force companies to report ransomware demands and similar issues. DP World didn't say if it had received any demands during the latest incident. The company said it was investigating what happened.
All right, shifting gears now. Hyundai joins the trend among automakers by increasing wages for its US workforce, highlighting a broader industry shift towards prioritizing employee compensation. Let's take a look.
The US auto strikes may have wrapped up, but their effects continue to ripple through the industry. Unprecedented simultaneous stoppages at the Detroit 3 ended with big deals on wages. Workers won increases of around a third when cost of living allowances are factored in. Now other automakers are racing to strike their own deals in a bid to hang on to labour. On Monday, Hyundai Motor was the latest to announce an agreement. It's going to hike wages for non-union production workers at its Alabama plant by 25%. There will also be increases for an electric vehicle factory in Georgia that is yet to open. The firm says the hikes are meant to help it recruit and retain top talent. Last week, Honda said it would give its US production staff an 11% pay hike and cut the amount of time it takes workers to hit the top wage tier. Japanese rival Toyota has agreed to a similar deal. Earlier in the month, United Auto Workers chief Sean Fain said firms using non-union labour would be the next target.
Toyota isn't giving out raises out of the goodness of their heart. Toyota is the largest and most profitable auto company in the world. They could have just as easily raised wages a month ago or a year ago. They did it now because the company knows we're coming for them.
On a visit to Illinois last week, President Joe Biden said he backed efforts to unionize at firms that currently use non-union labor. That includes Tesla and Toyota. Biden said all auto workers deserved deals similar to that agreed at the Detroit 3.
All right, wage hike there. Music to the ears of auto workers in the US. Talking about music, good news for all fans of Elvis Presley and Bob Dylan as iconic items from significant moments of the 20th century are about to hit the auction block. What's on offer? From Elvis Presley's 6th grade report card to the master recordings of Bob Dylan's inaugural album, this auction promises an exclusive peek into the past. The auction also features original recordings and behind-the-scenes conversations with none other than producer John Hammond and a handwritten note from President John F. Kennedy. Here's more.
This is the original sealed sleeve. These are studio master tapes, 3 of them altogether, totaling about 3 hours of audio recordings, done in 1961 here in New York City at the studios of Columbia Records, when Bob Dylan's very first album was being made.
What was the name of that, Bob?
Man of Constant Sorrow.
Man of Constant.
Did you get that?
I did.
Oh, did you like that one?
Sure, it's all right.
You can see Elvis's grades, which went from pretty good to not so pretty good, but he was very, very good in music, I can assure you that. This note that I have right here, consistent with what President Kennedy often was known for doing, where he would sit at his desk or sit wherever he was and doodle little pictures of sailboats, which you can see clearly was something that he always enjoyed. Here with sailboats and other little waves, we have his note where he speaks of placing a man on the moon before the end of that decade by 1970.
All right, with that, we've completely run out of time. This was World Business Report. We'll be back tomorrow with more stories from around the world of business, economy, and finance and brands that really make an impact on your life. But don't go anywhere. More news and updates coming right here on News9 Live. Thanks very much for watching.
ChatGPT. It can generate codes and human-like responses through text, write stories, and do a lot more.
I work in a newsroom with anchors, researchers and scriptwriters, graphic artists, producers, video editors, camera crew. But does a newsroom really need them today?
All of us have to think about unique and distinctive value addition that cannot be automated or repeated or replaced by a machine.
ChatGPT may kill many companies.